Good afternoon, traders. This is a live trade recap. I took two trades this morning right at the market open. I'm going to show you what happened with them in just a moment. First, I'd like to show you my screener and show you how I pick my stocks. Now, normally I make these videos right after I trade. I didn't have time this morning, so this is a little bit later in the day, so things are going to look pretty different, but I use my mid-cap screener. Always click the three dots. That way your filters are applied, and then I organize the list by volume. And then I just focus on the stocks on the first page, and CLF, which is still there. That was the one that caught my attention this morning. TME and I believe TIGR as well. AMC was up here, but most of those, here's TIGR, those were trading below the 200 MA on the daily chart. AMC was not, but AMC never broke above its previous high. So let's take a look at the video and you'll see exactly what I'm talking about. So let's look at the few that did not meet the chart criteria to even make it on the chart. So they made it past the screener criteria, but not the chart criteria. All of this is written in my trading plan. And you can see here's the 200 MA on the daily chart and the price is trading below. So that's an easy reject right there. Don't have to even have that on the chart. TIGR, same thing. There's the 200 MA on the daily. Price is trading below. So that gets removed. AMC obviously is trading above the 200 MA, which is right there, but it never made it over its previous day's high, at least not while I was trading. But it did meet the chart criteria. It could stay on the chart on my chart page. So, and then we have American Airlines. That wasn't really doing anything. Well, what was the deal with that one? So it was trading below the 200 MA on the daily. So I started to put my previous day high line, but it didn't make any sense to do that because it was still below the 200 MA daily. So I got rid of it. And here is CLF. And you can see that the 200, it's trading above the 200 MA on the daily. And then this is the market open. And I'm just waiting. Actually, I was already triggered once this thing popped up on my chart because it was trading above the previous day high. So all I need to do is wait for one candle to pull back. And that happened here on this red candle. So as soon as a 1 minute candle makes a new high, which would be, I believe, let's see, 24.39 or better, that's my trigger to get in. That's already happened. So if the price comes back down to that level, which you could see it did, I'm allowed to trigger my entry, and I got filled exactly where I wanted to at 24.39. And then I moved my stop up. I had to remind myself, get that stop in place quick, and then figure out where the exact stop is, because a couple days ago I got flushed out a little bit on a stock. So there we've got the stop loss in place using my 2R calculator. You can download that at patreon.com/tradingarmor. And this tells me my profit target. I just put my entry price, my stop loss, and it spits out the profit target based on 2 times reward versus my risk. And I also have a calculator that you can put any risk factor or reward factor in there you want. If you want to trade 1.5 to 1 or 3 to 1 or whatever, you can just type that in and it'll give you the automatic profit target. So there, by the time I move my profit target in place, I was already stopped out of the trade. I must have got stopped out by 1 cent on this trade. So, but you know, that happens sometimes. And I'd rather take those losses, those stops, than keep the stop very loose and risk losing, you know, if I lose multiple trades where I have a wider stop, then that accounts to a much larger loss. And that can happen. That would happen on my past trades. You know, sometimes people comment like, oh, your stops are too tight. No, they're not. Believe me. So maybe you can isolate a couple of trades where having a wider stop would have benefited me. But the beauty of keeping records of every single trade that you take, you know, over time that whether or not the stop that you're using is appropriate for the type of trading you're doing. And for me, this is, because if my stop was wider, my 2R profit would be even higher. My target would be higher and less likely to get hit. So I know based on all of my data that this is the best I can do with this trading. There is one change that I could make after I'm done collecting all of this test trading data. And I'm going to kind of let you know about that probably this weekend on my results recap of my trading strategy results so far. So here we are on that second trade, the CLF, because my plan and my strategy says that once I'm stopped out of a trade, I have to look for the next entry. That's what I did. As soon as this 1 minute candle made a new high, I got in for the break of that candle. It ended up being basically the same price. Here we are now. I'm just reducing the number of charts on my page because now I don't want to be bothered by any any charts that I'm not trading. These are just looking at the market, and SPXL, that's my swing trade. CLF is the only day trade, so that's the only thing that I'm looking at. And I got in for the break of this red candle, and then of course my stop loss is the low of that candle. So the stop loss ended up being in the exact same place as before, and the entry was slightly lower. The ideal entry was the same actually, but because of some oscillation in the price when I triggered my hotkeys, I got filled a couple cents slower, which you might think, oh, that's a great thing, you got in cheaper. Yeah, but that actually hurts you on the profit target end, because now my profit target is lower by 4 cents. And if you're trading a whole bunch of shares, that could add up a lot, and the profit target would have been hit either way. So sometimes getting in for cheaper doesn't really help. If the setup is really good and strong and there's volume there, a little bit of slippage on the way up is never an issue. You always get filled. So if you get in a little bit cheaper than you wanted to, it's generally not a good thing. Counterintuitive to what you may hear on a lot of YouTube channels and maybe Discords or whatever. So let's just fast forward a little bit and see what happens with this trade. This is trade number 2 of the day. I'm allowed to take up to 3 trades. If I lose 3 trades, I stop trading. If any one of those 3 trades goes to 2R, I also stop trading. So it looks like we're about to get hit here. Here's 24.62, there's 24.63, and that's it. We're filled. So nice 2R trade. So I ended up green on the day because I trade all or nothing 2R. So if one trade fails, I'm down 1 times my risk. And then when a trade works, I'm up 2 times my risk. So today I end the day up 1 times my risk. I decided I'm not going to go over the spreadsheet on every video. I'm going to show you the spreadsheet during my kind of weekend review type of thing on the weekend, where I showed you the results of the trading plan so far. So look out for that. We are up 13R, 13 times our risk on this. I think we've done 73, 74 trades now, something like that. So doing well. My goal is to be up by 20R. I mean, my goal is to be profitable. That's it, and to prove that this strategy works. But if I can get to 20R by trade 100, that would be great. That'd just be like icing on the cake. And then we'll switch to full position size on this trading strategy. So let me know if you have any questions about this trade or my strategy or my spreadsheet, my plan, all of that stuff. And I'll get back to you in the comment section below. As always, enter every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.